We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up CMG. We are on the 12-month time frame. Price action last candle to the right hand side is a huge bullish green candle. Current price is sitting at 2038.47. So if price pushes up further, we have to see where that market's going to go. But trying to figure out the structure of what's going on. Price action did break the third to last candle highs of that wick, which would be near the numbers of 1950.98. If price pushes down, it can tag the midpoint of the current price action candle, which will land on the second, third, the last candle's bodies, the top of those bodies. And if price drops down further, it can drop down towards the price second, third, last candle bodies. So that will be the support. If it breaks all the way through, then we're going to see it tag the second or third last candle bodies. So if this market pushes up further, what are we looking for? So we can see that the price action candle has pushed up from the bullish green candle, from the second, third candles being the third last candle being the push, seconds a retest. The market pushed up with a price action. So to identify the market push, came back to retest, and we did receive that break of the second last candle high as a structure. So that market did break those numbers of 1950.98. So we are going to see, we have to wait around to see if that market's going to, it can draw back and identify a reversal and drop down. But if not, it could identify the break as we currently see with the SR line at 1950, came back, it could come back to retest or identify some type of bearish red candle up to the midpoint of the current price action candle. So it can identify a break, a retest somewhere within that area near the numbers of 1719.38 or 1950, and then still work his way up for break, retest, a push, another retest, and the market pushes up. So identify as the first leg, second leg, third leg, and we can see that incline W. Now, if not, the market can consolidate within the current price, second and third last candle, somewhere in this area. So that market could be identified as consolidation. If we don't receive that, market pushes up further for the retest, or just push up with bullish green candles. Now, if the market's denied, it can happen. A few things can happen. The price action can draw back, drop a long wick, or the bearish candle can come and draw down towards the second last candle, which would be price action, and then identify a pattern and push that market down. So if so, that market can identify a pattern in that area for that coming up in green for that first leg, second leg, third leg. And we can see that drop down. If it drops down with the bearish red candle, create a double top in that area. But so far, we do see that we have a retest the market push. So if we draw our screen back just a little bit to see where the market started off at. So trying to figure out what patterns being formed that created that high. So we do have green candles. So it pushed up from somewhere. But if you think about creating that bearish red candles coming down, so it create that first leg, second leg, third leg, fourth leg, we have a double bottom, a retest one, retest two, received another push. So we have a double bottom, a double retest, market pushed up, came back to retest with the fourth to last candle. Once again, market pushed up to a following level. So there's another W in here, as we can see, for that first, second, third, fourth, retest, market pushed up once, retest with the second last candle, and market pushed up twice. So now we're going to see if that market's going to identify a break and retest or consolidate sideways, or identify a reversal for that market to drop down. Walking down to the 6-month time frame. So price action 6-month time frame reading as a huge bullish green candle still, engulfing the previous candles for the second, third, fourth. So we received the break of the SR line. So as we said before, we are still waiting for that market to identify if it's going to push, retest, and push up further for that incline W formation, or consolidate sideways within that area, or drop down. Headed down to a 3-month time frame. So now on the 3-month time frame, we still receiving that bullish green candle, pretty big, combined with the second last candle will be huge. The price action candle did break out those SR lines. So now you ask ourselves, look at price action. Where's price coming from? Look towards the bottom of that red and green, and we can see that pattern that's being formed right in this area, that's formed in that area, which identify that market created that consolidation, but the pattern at the low. So we do see that first, second, third, fourth. So we have a double bottom. Market did break the previous side. So we did receive the break, and we did receive the break of the previous side and the break of the SR line of structure from the earlier time frame. So we're going to see if it's going to retest, push up, or maybe it just drop down with a bearish red candle. And if so, that means it can drop down through the price action candle on that 3-month time frame and push that market down, or at least create that pattern. On the monthly time frame, we have price action as a bullish green candle, still huge. Now we have a pattern at that low, so let's read what pattern was formed on the weekly time frame that pushed price into that direction. So coming down in red, we have an overall, we have it multiple times. So just paying attention to this area here. It did happen here as well. So if just say we added all, combined everything in one, because it did tag our support lines. So identify as first, second, third, fourth retest. Market pushed up. So we have a triple bottom to the left side. Market came back to retest with red and green for that first, second, third, fourth retest. Market pushed up again. So we have a triple bottom to the left hand side, triple bottom below price that pushed market up. Working our way down to the weekly time frame. So price action weekly time frame is reading as a huge bullish green candle. Still receive the break of the SR line. So once we receive the break, we're going to see if it's going to retest, push up further, consolidate sideways, or work its way back down. So we're just waiting to see what's happening. Working our way down to the daily. So on the daily time frame, we have price action as a huge bullish green candle. So we can see that market came off of the second to last candle in the market and a few other candles to the left hand side, but primarily grabbing that second last candle, highest of the day and low of the day. So as we walk down the time frame, we're going to see what was performed for that market to push up with that bullish green candle. So on the 4-hour time frame, we can see that the market did consolidate the previous days, and some type of pattern was formed. Let's see if we can draw it out. So on the 18th, the market broke into that area, so it came back to retest. So we have a first, second, market came back to retest again yesterday around 1:30 p.m. with that candle that was formed, and the market pushed up and created that fourth leg with price action today. So we have a double bottom. That market created a double bottom within the last few days before that market pushed, headed down to the 3. Still see that consolidation. Market's identifying the break, retest, pushed up, came back to retest once again, still reading as that double bottom. 2-hour time frame price action, bullish green candle, more like a doji style, is a weak candle, so it's side by side with the price. Second to last candle. So to figure out what's going on, you can take the midpoint of the second to last candle, so the market can retest that midpoint or retest that high area as it's currently doing, and still create that momentum for identify as a push, a retest with the price action. Market could push up further, or it could come down at least to the midpoint and push up further and still create that break and retest, unless it breaks down through the midpoint line. And then if it breaks down through the second last candle, that market can be headed back down to maybe towards the zone, but break down the levels, it will be high, overall, mid, and we can see that low. So market has to break the second last candle to head down to the zone. Working our way to the 1-hour time frame, still side by side. So when you start seeing these candles side by side with price second and third, what this means is that third last candle spiked up once, second last candle spiked up twice, price action spiked up again. That means they're having a hard time breaking. So you're going to see if it's going to follow the break. If not, bearish red candle can drop all that back down to the midpoint of the third last candle in the 1-hour time frame. Very important information. Please review and study Forex pattern cheat sheet, breakout and retest strategy. Click on images. Okay, guys, this is Cam Jones, FX, CMG, Star.